So my job today is to take you on a whistle-stop tour of the problems with the tax system. I'm going to try to set out why there is basically no good reason to have the tax system we currently have, and we should really get to grips with it. So to kick things off, I thought I would set out just a very broad picture of how the current tax system treats different legal forms. So this is just an example of a job that's going to generate £40,000. I'm just showing you the tax liability according to whether that job is done by an employee, a self-employed person, or a company owner-manager. And you can already see the headline that the first panel was alluding to. There are big tax differences according to how you do that job. The entire difference between employees and self-employed people is driven by the national insurance system. So don't be fooled here by the fact that income tax looks different. That's just because employer NICS is kind of charged first, so the income at the personal level is a bit different in my example. Trust me when I say the entire difference there is national insurance contributions. And there are two things going on. Self-employed get a lower rate of main national insurance contributions, or NICS, and there is no equivalent to employer NICS, which is just a bit of social security that happens to be charged at the employer level. But we should think of both of those NICS as just a tax on that job. If you look at owner managers, the reason that they're getting an even lower tax rate is because I'm assuming that they're going to do the sort of tax-savvy thing. So they could replicate the first column and pay themselves as if they were just an employee of their own business. In fact, the easier thing and the better thing to do from a tax point of view is to take a small salary, to take advantage of the tax-free personal allowance, and then to pay yourself in dividends. That income is first taxed at the corporate level with corporation tax, and then at the personal level with dividend tax. And actually, this is probably the worst case scenario for that owner manager because there's a whole bunch of other stuff that you can do to get that tax rate down, including things like splitting income with a spouse, retaining income in your company and getting lower tax capital gains at a later date. So that's kind of the worst case scenario. One thing to note in passing is there's no worker category on that chart. That's because there is no worker category in tax. So a lot of the workers that we've just been hearing about will be in one of these categories, so probably self-employed for tax purposes. And that's one of the things I think we'll come back to throughout the day, I suspect, the fact that tax law and employment law differ. So it's really these big tax differences that are causing lots of the problems that we're seeing. Clearly tax isn't the only thing that matters in driving how people choose to organise themselves, but it's giving people a pretty big nudge in that direction. That's a nudge that's been in the system for a long time. And that's one of the reasons why the Chancellor in the March budget this year tried to get a grip on this a little bit and start moving towards narrowing these gaps. So one of the things we know is going to happen is a small increase in dividend taxes through a cut in the allowance. That's going to marginally reduce that incentive, although we're talking really marginal. The other thing that all the UK people here will know about is the failed attempt to increase national insurance contributions. I think it's worth just dwelling on that for a minute because national insurance, as Julian highlighted, is so important. You can see the big gap here is driven by national employer NICS. Another way to see that is to look at the NICS schedule. So here I'm just showing you the NICS schedule for a self-employed person and an employee. And you can see there's a really big gap. This is what the Chancellor tried to do, which at the time was deemed to be a really big deal because moving to 11 was moving closer to employee NICS. But actually, once you realise that employer NICS is really important, the rates we should be comparing are 9% for self-employed people and an effective rate of 22.7%, the main rate, for employees. And it's really until we can get hold of this gap that's driven by employer NICS, even if we got self-employed NICS up, which the Chancellor couldn't, we're going to get nowhere close. So to give you some sense of scale, if the Chancellor could have made his change, at worst, people on the higher bracket would have been £600 worse off. But someone on £60,000 is getting a tax break of over £7,000. So, and that gap gets bigger as you go out. So it's really quite a big problem kind of baked into the system. So you can think, I'm calling these a problem. I think you can start to see why they're a problem. One is what Abby said about fairness. You have similar individuals doing similar work, getting similar income, getting really different tax liabilities. That's really going to affect the kind of lifetime resources they have available to them. There's also an issue of efficiency. Tax is clearly distorting people's choices. It's not the only thing that matters, but it's clearly one of the reasons why people are choosing to run their own businesses. And once they run their own businesses, there's very clear evidence that it affects how they take income out of their businesses. I mean, one really blunt way to say that is that there are some people out there who are running their own businesses, and they would be better off, and society would be better off if they closed their businesses and worked for more productive, larger companies. There's a price we all pay for having the tax distort people's choices in this way. And of course, because it's distorting choices, we worry about avoidance and people artificially shifting across these boundaries, and we go to lots of effort to police those boundaries and put lots of time and thought into that. The other problem is just a basic one of money, and this is probably what in part motivated the government to try to take steps to sort this out. So there's lots of numbers flying out there. I'm going to give you some other big ones to give you a sense of the scale of what we're talking about. So it's estimated by our tax authority that we forego about £5 billion in revenue by giving lower national insurance rates to the self-employed. To give you a sense of scale, that equates to about £1,200 per self-employed person. And I think it's particularly surprising because we currently only raise about £3 billion from our self-employed NIC system. So put another way, that means that self-employed people are only paying less than 40% of what they would be paying if we treated them equivalently to employees. So that's a pretty big difference. For owner managers, actually they get bigger tax breaks even though there are fewer of them. So that means we forego £6 billion in revenue, which is a tax break of about £9,000 per company owner manager. In both cases, these are averages. You can already tell from the chart I just showed you that actually a lot of the benefit is going to the higher earners. So we worry a lot about white van men and lower earners. When we think about Uber and Deliveroo, we're thinking about people at the lower end of the spectrum. But in terms of who's really benefiting in sort of the pounds, billions terms from these tax breaks, it's those at the higher end. It's the lawyers, the barristers, the highly paid freelance consultants. So if you're worried about poor people, this is a really bad way to help poor people. We should be looking at other parts of the tax system, including things like changes to universal credit, which I'm going to leave aside because I know Caroline will come back to. But there are other things that are much more important for poor people than just these tax breaks. One thing that's focused minds recently is that because we had this big growth that various people have talked about, these numbers are going to go up quite substantially. So there's lots of numbers here. Really big picture. By 2021-22, the scale of tax breaks to people running their own businesses will be getting on towards £16 billion. So even if you don't care about the inefficiency and unfairness, which I think we should, there's clearly a public finance issue there, and something has to be done. We have to raise taxes on these guys, or raise tax somewhere else, or cut spending, or increase borrowing. But there's not an option that says do nothing at this point. Something is going to be done. It's just a case of what. So that's kind of the problem with the tax system in a very big picture way. I thought it was worth running through three of the main arguments in favour of those lower rates. And I'm going to argue that none of them really hold much water. So argument number one is that lower NICS rates, so this is our social security, is a good way to reflect the lower access to publicly funded benefits. But as Abby already told us up front, that doesn't really work anymore. So we do have a national insurance contribution system, which broadly means that you have to have paid some money in to get some stuff out, but that link is broken in general for most people. And actually nowadays, the self-employed get really very, very similar benefits to employees. The big difference used to be pensions. That's not true anymore. They're accruing the same rights since April last year to a single-tier state pension. So effectively, the government gave them extra benefits and kept their tax break the same. There are just two benefits they don't get, which are contribution-based job seekers allowance and statutory paternal benefits, although they do get maternity allowance. So actually the difference there is much more than many people think. Obviously for the individuals who are getting these benefits, they can be quite important, and we should think about whether we can extend them to the self-employed. But in revenue terms, they are tiny, and they are far, far too small to justify anything like the £5 billion tax break I showed you. So another way to say that is that, I said the effective rate for employees is 22.7%. If you wanted to reduce that rate for self-employed people to reflect these benefits, we would be haggling over whether that rate should be 22.4, 22.5, something of that region. We would not be in the ballpark of arguing for 9%. So this just doesn't justify the current benefit to self-employed. The other argument, which I think is probably the most important for today's debate, so I'll sort of dwell on this a little bit, is about employment rights. So the argument goes that self-employed people don't get employment rights, such as holiday pay and sick pay, which we all know to be true, and therefore they should get a lower tax rate to reflect that. Conversely, employees do get those rights and they should pay a higher tax rate as a result. Now, I'm well aware that it's a very compelling sounding argument, but it's just completely logically flawed. It doesn't work at all. And the reason, and the kind of key to understanding why it doesn't work, is to realise that employment rights are not a benefit that the government gives to employees. You shouldn't think of them as like a state pension where we send people some money. They are a transfer of rights from employers to employees within this employment contract. Now, albeit a transfer that's being dictated by the government, but it's from employers to employees. And once you realise that the tax kind of can't offset it. So imagine tomorrow we make employment more attractive. We give everyone 50 paid holiday days, for example. Then you've made employment more attractive to the employee. I'd quite like 50 holiday days. And you can kind of think of higher taxes as trying to offset that. But at the very same time, those employment rights have made employment less attractive to the employer. So now I'm more likely to want to go and contract with a self-employed person to not have to provide those holiday pay. And tax there is reinforcing that problem. So not only are you not solving the problem you thought you might be solving, in many cases you're making it worse. The punchline is that because there is no net benefit to employment, there's nothing for the tax system to offset. And what you're likely to do is actually make things worse. So I think for the point of today, actually, this is hugely good news. We have a tax system currently that muddles together lots of issues. It muddles together what we want to do with the tax system, how we want to do social security, how we want to administer the tax, what employment rights, and it's in this big mess. So it's completely right that we're all here today to think about that mess, and it'll take us a while to get it apart. But when thinking about what we would like the optimal systems to look like, we can decide what should employment right look like, how can we better do that system? And that doesn't affect at all how I want to design the tax system. And conversely, we can design the tax system, and that doesn't affect how we want to do employment rights. So we have to deal with them together now because they're so interlinked. But going forward, we can just take them apart. And I think once people realise that, that makes the challenge we face, although hard, I think less difficult than people think. So I give you 3 arguments for lower rates. The last one is about, which has already been alluded to earlier, about risk-taking and entrepreneurship, and whether the lower rates are a good way to boost these things. I think the first thing to say about that is that the difficulty and risk associated with running your own business do not in themselves justify a favourable tax treatment. I mean, that's why we don't give a tax subsidy to gambling, for example. And I mean, less glibly, we don't want to push people into risky and taking bad risks, basically. There are some people who shouldn't be running their own businesses because the market returns aren't high enough. And we don't want the tax system to be distorting them to do that. I think it's also worth saying there's lots of confused thinking when people discuss these kinds of arguments about what they actually want to target. So the question we should be asking is, what is it that we want to support? Is it innovation? Is it new startups? Do we want to worry about investment? Are we concerned about those on low incomes? What is it? And once we know what it is, we can design a policy. At the moment, I'd argue that these across-the-board lower rates that we have aren't targeted at any of those things. There's no evidence that the most benefits go to the people who are most entrepreneurial or who are doing most investment. And of course, even if we can think of some benefits to those lower rates, we have to weigh them against all the costs of these distortions that we're putting in the system. And more importantly, there are better ways to do a lot of those things. So we should at least start by thinking about what is it we want to support and how can we design a system that works for that. So let me finish with my last minute or so on giving you a very, very big picture, what would I do about this mess? So I think the aim really is to align treatment across legal forms. I think the big caveat there is to notice that there is one important difference between people running their own business and employees, which is that the former invest money in their own business. They do investment. And we definitely do not want the tax system to be distorting those investment choices. So we need to make sure the tax base is such that money invested in a business is tax deductible to not distort investment. But conditional on having sorted out the tax base, then I think we should align rates at the margin. There are various ways to do that in practice, but what it would really mean is align the national insurance contributions paid by the self-employed with those of employees and employers combined, and tax dividend income and capital gains under the same schedule as earned income, including NICs, and after accounting for corporation tax. The basic point here is that an extra £1 in your pocket should be taxed the same way, regardless of how you came about getting that £1 in your pocket. And that you can see if you do that, you instantly wipe away a lot of the problems that we've been discussing today. And this really speaks to what Judith brought up, is that the benefit of doing something like this is that it treats the system for what it is, as a system. What we currently do is we see these tax differences, we think, oh dear, people are switching across categories. Let's shore up the boundaries. Let's make the boundaries even sharper. I think that has to be doomed to fail because you can always be either side of a boundary. And more importantly, there is no good reason for those boundaries to be there. So rather than defend a system that was stupid in the first place, I think we should just step back and say there is no good reason for these boundaries. Let's just wash them away. And that's not to say this is easy. It's not. This would be a really big and difficult change. But I think at very least we should have this as a benchmark to be working towards. So let me conclude very quickly by saying I think it's very hard to think of a coherent policy aim to which the current system is an appropriate response. I'd love to hear if you think you have an answer to that. I think this alignment of treatment should be the benchmark to which we all work. And if then we want to give some people beneficial treatment, we can think about doing that and justifying it relative to a aligned system. And I think the good news for today is that we really should be thinking about separating tax and employment issues and designing the systems without having to worry about how they should interact in the in the best case world. I'll stop there.